Greetings, Inderes TV viewers. Let's talk about Sampo's fourth quarter and full year results 25 with the new CEO Morten Thorsrud. Morten, thanks for having me here.
My pleasure.
First things first, you clarified Sampo's dividend policy today, or the whole payout policy. What's the message behind this clarification?
Yeah, I guess in reality it's a little bit of a tweaking to the dividend policy or capital return policy. First of all, we continue to say that we're a highly cash generative business, and of course we aim to return a lot of that value creation to our shareholders. So we state that in a normal year, typically 90% of our operating profits will be returned to our shareholders. And then we also say that there are two ways of returning then obviously capital. We will continue to focus on dividends and to have a progressive dividend. And we say that that should at least be 60%. So that is sort of a small change. And then we open up also a little bit more for buybacks. Then, as I see it, this is a small change. We still look at having a good progressive dividend payment.
And when you divest these legacy assets you still have, so we should assume that that money will be returned to shareholders via buybacks, basically.
Yeah, we already communicated that as we are reducing our stakes in the so-called private equity holdings, we are mainly going to return it to shareholders, either to dividends or buybacks. Yeah.
Should investors regard that the dividend level you're paying out, that's almost a holy thing to you? So the buybacks, they are more flexible, but the dividend or investors to get there should be under no circumstance situation that you have to lower the dividend.
Yeah, I think it's important for our investor base to be able to, have some visibility on the dividends, and that's why we try to be also very clear on that we would like to see a progressive dividend also going forward. So yes, I think it's correct to look upon it a little bit like that.
Yeah, as you already mentioned, the dividends come from cash flow that comes from operations, and looking at your results, they were excellent as usual. What's your take on Sampo's results?
It's been a good 2025. Strong growth, top line growth of 8%. This is insurance, so 8% is really good top line development for us. Good momentum in basically all parts of the business. Strong momentum in private in the Nordics, strong momentum in SME. Also throughout the year, strong momentum in the UK. And then also excellent development on the insurance service results of the core insurance result. 13% increase, which is the third year of 13% increase. So that says something about stability, I guess.
Yeah, that's impressive to say the least. As you mentioned, the 8% growth, that's for insurance company, that's like a technology company growing like 100% a year. That's in the same field. The claims inflation has been quite high in recent years, but I think, can we assume that in the longer term that should come down, and then the normal growth rate of Sampo should be somewhere near the nominal GDP growth of Nordics and UK? What do you say?
Now, it's true that the premium growth has been fueled a little bit by high inflation over the last few years. We see it's coming down a little bit, but we still expect a little bit elevated, inflation figures on the claim side compared to the underlying CPI inflation in society. Perhaps just a note on that, our claims cost is largely driven by wages and wage increases. Things need to be repaired, and wage increases are still clearly above inflation in the Nordics. Then, of course, we are also growing our business in terms of number of customers, both in the private segment and the commercial segment. And not to mention, of course, in the UK, where we have a very strong growth in number of customers. And we expect that, of course, will be an important driver also going forward, as inflation will ease off a little bit at least.
Yeah. In your guidance, Sampo said that we should look at underwriting results growth is somewhere between 0 and 8%, and especially the lower bound it's not could be described not so ambitious maybe. Are you just careful, or what's the message behind this guidance?
We're always careful. We are insurance people. No, of course, there are always some conservatism particularly in the start of the year. But then one should also bear in mind that 2025 was actually quite a favorable year, both in terms of large claims and also in terms of weather claims throughout the year. If you adjust for that and sort of look at the underlying development, our outlook is more than indicating actually a 5% increase to again 13% increase.
Yeah.
So again, this is insurance. We're always a little bit exposed to large claims and weather, and a bit of conservatism I think is good to have at the very beginning of a year.
Yeah, understandable. I think this is the only business that can really explain numbers because of weather. For other businesses, it's usually just an excuse, but for you, I think it's more than acceptable. How about the competitive landscape, especially in Britain? I think it's already getting, it's a tighter market again. How do you see the competitive landscape evolving there?
The UK market is a highly competitive market, but it's also a very rational market. And again, to talk a little bit about inflation, of course, the inflation peak in the UK was clearly higher than what we experienced in the Nordic region or in Europe overall. And of course, insurers in the UK were a little bit late to price for inflation. And again, when all the insurers realized this, they were rational and they increased prices quite a lot in order to meet their targets, which means that they increased prices more than they kind of would need in a medium-term perspective. Then, of course, it's rational to reduce prices a little bit, which is exactly what they did in the beginning of or first half of 2025. And then in the second half of 2025, it's been more a sideways movement. So we continue to see that the UK market is super rational. But of course, since premium levels have come down then year on year, it gives us less growth, of course, as we renew business with, again, average lower premium rates.
Yeah.
But I think this is just kind of consolidating on a certain level, and then of course we have excellent growth rates or growth expectations going forward also for the UK market.
Of course. Then a hot discussion among investors have been the announcement of the Lemonade. Lemonade could be described as maybe a tech-driven disruptor in the insurance field. They said that they would give 50% discount or lower prices 50% for Tesla drivers who use the full self-driving service in Tesla. I know that people don't use self-driving stuff here in the Nordics, and maybe it takes a lot of time. But how do you see that? How could this affect competition structurally in the long term in the Nordics as well? Should the self-driving cars come here?
It's an interesting case, and there's been a surprisingly lot of discussions about this over the last few weeks. I think, of course, technology and cars and technology development is not at all a new thing. You've seen safer cars, safer roads having quite an impact already. If you look at fatalities from car accidents in the Nordic region, they are down between 40% and 60% in the various Nordic countries over the last 15 years. Of course, that's a really good development for society. For us, it means that we've had far less bodily injury claims, sort of, which are complicated, typically quite large. But then that has been more than offset by an increase in frequency and in particular severity of the small, medium-sized claims. And in particular with cars with more technology, the repair cost of that is quite significantly higher than, the old cars without all of the sensors. So I think the jury is still out when it comes to the impact of this long term. I think very well this could be something that make insurance even more important, and that the insurance market as such is growing. Because again, these fully autonomous vehicles, they need to be maintained and repaired through the life cycle of the car. So whilst you could just paint the scratch on the bumper before, now you need to make sure that you actually repair it with all of the sensor. Again, I think for a big player like Sampo, a professional player with the quite sort of, I would say, almost like dominant position that we have in the Nordic region and also kind of very strong position in UK, I think we are an extremely attractive partner to the motor or automotive industry, which we see already. We have excellent relationships, and I think this brings opportunities for us. And it's making motor insurance more difficult, which means that there will be perhaps even bigger performance difference between the more capable players and the others.
So the more complicated the game gets, the better for you.
I think so.
Yeah. And of course, this would take a lot of, even if self-driving vehicles would get popular in the Nordics, I think in Finland the average age of car is like 15 years. So it would be quite a long time to replace all the vehicles.
Yeah, that is true. But again, I'm more looking upon this as an opportunity rather than anything else. We've seen adoption rate of EVs in Norway, for instance, being extremely high. 30% of the personal cars in Norway are now EVs, which has been, I think, a good development in general, but definitely not a bad thing for us as an insurance company. So, I look upon this as more an opportunity than anything else.
Thanks for interesting comments, and I look forward to our next interview.
Thank you.